Orcelus organic cell for us.
The information provided in this communication is for informational purposes only, and does not constitute financial advice. It is important to note that past performance is not indicative of future results. Please consult with a qualified financial advisor to determine the suitability of any investment strategy.
Welcome to the deep dive. Today we're doing something pretty unique.
We are.
We're getting a rare, behind-the-scenes look at an investment fund's internal letter.
That's right, the Orcelus Letter Q3 2025.
And this isn't just about, financial reports. It's packed with insights into global trends, surprising facts about happiness, even life philosophies. Really thought-provoking stuff.
Absolutely.
So, our mission for this deep dive, basically to pull out the most important nuggets of knowledge from this unique document.
Everything from investment strategy in these volatile times
to global well-being, tech innovation, the works. Okay, let's unpack this.
All right.
So the letter kicks things off by talking about the global situation, highlighting significant economic volatility.
Yeah, it mentions the ceasefire between Iran and Israel and that temporary truce in the China-U.S. trade war.
Right, key factors creating uncertainty.
And in response, Orcelus says they've entered what they're calling a waiting game.
Waiting game. So why? Why this strategic underinvestment?
Well, they spell it out pretty clearly. They mention a distinct absence of investment opportunities that truly inspire us.
Okay, nothing's jumping out at them.
Exactly. And their analysis shows company valuations across different sectors seem, high.
On the higher side, yeah.
Which makes it tough to find investments offering the right kind of risk-adjusted returns and potential for growth they look for.
That's a really deliberate choice then, isn't it? To prioritize preserving capital.
Over just putting money to work anywhere.
Right. How hard is that kind of patience for a fund?
It takes discipline. And what's fascinating here is how they're actively choosing that patience.
Even if it means strategic underinvestment.
Right. In an overvalued market. It's actually a good lesson, for anyone thinking long-term financially. Sometimes waiting is the smart move.
Okay, let's shift gears then. From the big picture strategy to a specific holding they talk about. The A2 Milk Company.
Yes, highlighted as a key strategic holding.
And this comes after a, quote, highly insightful trip to China and South Korea.
So they first invested back in 2020. They saw a compelling opportunity.
Why there specifically?
Well, global whole milk auction prices were low, but A2 Milk was kind of insulated.
Because it's a premium product.
Exactly. Its unique proposition set it apart from those broader market swings. Seemed like a solid bet.
But it wasn't exactly smooth sailing after that, was it?
Not at all. The letter talks about a really tough period, a 65% decline in our portfolio between 2021 and 2022.
Wow, 65%. What caused that?
It was a perfect storm, really. Crucial China and Daigou sales channels dropped off significantly.
The retailer channels, yeah.
Plus, you had low birth rates, geopolitical tension. It even mentions board members resigning one by one.
That sounds like a real crisis point.
It does. But Orcelus, they showed unwavering conviction. They held on to their investment the whole time.
Didn't sell, didn't buy more.
Nope, just held steady. Remarkable commitment, really.
And looking at it now, in 2025, that patience seems to have paid off.
Hugely. A2 Milk has made a massive recovery.
Now a top 5 market holder in China's dairy industry.
Yeah, and significantly growing revenue. They're aiming for $2 billion by 2027.
And they've announced their first dividend too.
That's right. Shareholders getting a payout.
So, did the letter explain what changed? What fueled this turnaround beyond just holding on?
It does get into that. Those trips to China and Korea were key.
What did they find?
Really critical market differences. In China, A2 Milk grabbed that 5th largest market share by focusing hard on baby milk formula.
Right, targeting that specific segment.
And they're ramping up advertising, pushing into O2O channels, online to offline.
Okay, and Korea.
Completely different strategy there, primarily targeting the whole milk market.
Why the difference?
It's a direct result of differing birth rates and also a stronger sort of health and wellness focus in Korea. Shows how adaptable they had to be.
So that whole A2 Milk experience, challenges and all, it taught them a big lesson.
An incredibly valuable one, yes. The letter says it became the fundamental basis for how they now research businesses.
Understanding the whole environment around a company, not just the company itself.
Exactly. The surrounding environment, the things that can influence it.
Okay, let's move from dairy to digital, another big investment. Google.
Right. They invested back in 2022 before the stock split.
And the letter highlights Google Gemini AI.
Yeah, the extraordinary improvements, specifically this year's release of high-quality video generation with integrated sound and voice.
Groundbreaking stuff. How could that be used?
Well, it could revolutionize things like green screen work or creating props for videos.
By cutting costs and improving quality.
Precisely, making it much cheaper and delivering a better experience for creators.
The letter uses a YouTube analogy, right? How better quality drives views and income.
Exactly, and AI is now making that high production quality accessible even on a low budget. It's becoming standard.
Changing the whole game for content creation.
Definitely. And the Google-Samsung partnership is also deepening.
Okay, what's new there?
Well, last year we got Circle to Search, instantly identifying things in photos or videos.
Right, I remember that.
This year, it's full integration of Gemini AI into the Samsung ecosystem.
And the letter claims it's delivering performance that surpasses the iPhone.
For the first time, yeah, that's what they state.
That's a big claim. So this partnership and Android being more open, does the letter say that gives Google an edge, a moat?
Absolutely. It frames Android's open nature as a significant moat.
How so?
It lets Gemini expand into loads of other ecosystems, unlike Apple's more closed approach.
Right. Apple keeps things tight.
So Google gets wider reach, faster integration across different devices. It's a key strategic advantage.
Very interesting. Okay, so beyond investments, Orcelus has been doing some deep thinking internally.
Yeah, the letter mentions extensive and profound discussions over the last 4 months.
About what?
About a pretty fundamental question. Why are some countries happier than others?
Wow, okay. That's a big one. What did they find initially?
Well, they looked at a detailed happiness ranking report.
Based on data from 2021, 2023, and 2022, 2024.
Correct. And the striking observation was that the top 8 happiest nations were all in Europe.
All 8. So what's the secret sauce in those European countries? What did the analysis show?
A few key things stood out. First, a clear link between higher GDP per capita and happier citizens.
Okay. Wealth matters to some extent.
It seems correlated, yeah. Then there's the European model itself. Many use progressive taxes.
To fund big welfare states.
Right. Providing things like universal free healthcare and education, essential services for everyone.
And anything else. Demographics, maybe?
Yes, a striking pattern. Many of these happiest countries have relatively small populations.
Literacy.
And lots of access to nature, which suggests maybe a more intimate society, strong community ties.
Connection to nature, relaxation.
Exactly. More trust, social cohesion, and opportunities for recreation.
So to make sure their analysis was solid, they used control countries, right?
They did. 6 control countries in 3 groups. Australia, New Zealand for Oceania.
Japan, South Korea for East Asia.
And the US and China as the economic giants.
And they looked beyond just GDP and nature. What else?
4 extra categories to get a fuller picture.
Yeah.
Government corruption levels.
Okay.
Quality and access to education, effectiveness of healthcare, and the emphasis on work-life balance.
Right. Building more comprehensive view. What did that comparison reveal?
Well, it really highlights the contrast. Those top European countries, Finland, Denmark, Norway, Switzerland, they consistently rated high, good across all 4 factors. Low corruption, great education, great healthcare, good work-life balance.
So ticking all the boxes. What about the others?
It gets more varied. Take some Asian countries like Japan and South Korea.
Okay.
The analysis suggests a clear tendency there to focus more on health and well-being initiatives than on, say, work-life balance.
So strong health systems maybe, but work culture.
Can be intense. The letter notes they have very high education standards, but also incredibly strict competition.
Which has downsides.
Yeah, sadly linked to high youth suicide rates. So education gets a low bad rating in that context, despite the standards. And they also note generally higher government corruption in many Asian nations compared to the top European ones.
What about the US or China?
Interesting cases. The US rated low, bad for corruption and healthcare quality, mid for education, but high for work-life balance quality.
A real mix.
And China, low, bad on corruption, education, and work-life balance, but high, good for healthcare quality. It really shows there's no single formula.
And the report also mentioned other factors like crime rates, natural disasters.
Yes, lower crime, fewer disasters, cooler temperatures, clean air, all seem to contribute positively to the happiness score.
Okay.
But here's a really crucial point they emphasize. It's not just about how much money you earn.
Income itself doesn't equal happiness.
Not directly, according to this analysis. It's more about how you use those earnings. The satisfaction comes from achieving goals, reaching milestones.
That really makes you think, doesn't it? Well, it brings you, the listener, satisfaction beyond just the paycheck.
Exactly. It's a deeper question.
Okay, let's shift back to Orcelus's own finances. This year is a milestone, they say.
Yes, their very first time releasing fund performance by percentage.
Why the chain?
A commitment to greater transparency.
Got it. And operationally, costs are up.
Yeah, a persistent upward trend, mainly due to rising travel costs.
Especially overseas travel, right?
Exactly. Their research requires more of it.
So the key numbers for the financial year ending July 1st, 2025, what are they?
Okay, combined dividend and interest showed strong growth, 5.53% up from the previous year.
And the total fund?
Grew 17.3% year over year. That's compared to 24.4% growth in 2024.
So slower growth than last year, but still on track.
Yes, they reiterate they're still meeting their annual goals. 5% growth in dividends interest, and a 10% overall increase in the total fund year over year.
Now, they specifically addressed the huge performance in 2023-2024. That massive spike in dividends and interest, 329.42% growth.
Remarkable, wasn't it?
What drove that?
It was strategic timing. The fund was holding substantial cash reserves.
Okay.
And they put that cash into term deposits just as banks were offering really high interest rates, often over 6%.
Capitalizing on rising rates.
Precisely. The Reserve Bank was hiking its official cash rate for the first time in 5 years. They timed it perfectly.
Which explains why growth moderated in 2025.
Exactly. Those term deposits matured, funds moved to lower interest savings accounts, and the central bank rates started coming down from those highs.
Makes sense.
But they share a powerful long-term stat too.
Which is?
Interest and dividend earnings are up 3,400% over 5 years.
3,400%.
From a base of just $100 in 2021. They explicitly say this number shows the pure power of compounding.
Incredible. So looking at the whole 5-year journey.
They call it nothing short of extraordinary.
An overall increase of 76.4%.
Yeah, averaging 15.1% growth year over year, consistently beating their 50% benchmark.
Impressive track record.
It is. Which is why they feel comfortable reinforcing their current strategic decision to temporarily pause further major investments until next year.
Back to the waiting game.
Yep. Given the market uncertainty and valuation concerns, they're prioritizing long-term stability.
And the CEO adds a bit of personal color about the fund's origin.
Yeah, a nice touch. He talks about his frustration with his first savings account.
Offering a terrible 0.1% monthly interest rate.
Oh, been there.
Definitely. And that frustration was the catalyst.
Apparently so. To find a more effective way to make our hard-earned money genuinely work harder for us, which led to founding Orcelus.
A relatable origin story.
And it ties into their closing philosophy on wealth growth in this section. Growing this wealth wasn't always glamorous in the short term, but its true power reveals itself through the long-term growth we've achieved here today.
Patience and long-term vision again. Okay, the Q&A section offers some interesting bits too, like the name Orcelus.
Right, originally stood for organic, plant cells, and US for community.
From a vertical farming idea.
Yeah, that didn't happen, but the name stuck, symbolizing growth now in cultivating wealth.
And they push back on the idea that you need a super high IQ for investing.
They do. They say it's a common misconception. What's infinitely more crucial, they argue, is unwavering ethics and unimpeachable integrity.
Ethics as the bedrock.
That's the foundation for sound, sustainable strategies in their view.
The CEO also weighs in on education systems.
Yeah, expressing a wish that countries focus more on financial literacy earlier on.
Things like investing, economics, budgeting, taxes. Practical stuff.
Exactly. And he also emphasizes teaching negotiation, debate, public speaking.
Essential life skills, yeah.
He even shares a personal anecdote about learning negotiation from his father when discussing his pay as a kid. An annual ritual.
Early training.
Seems like it.
And they circle back to a poor Milk one more time in the Q&A.
Yes, reinforcing how that challenging experience fundamentally shaped their research approach, understanding the business within its environment.
Makes sense. They also list 5 rules to live by.
They do. Having good health, enjoying living, having no regrets, invest in you, contributing to our society.
Quite a list. And a movie recommendation.
A surprising one, Disney's Inside Out.
Really? Why that?
The CEO says it taught him about being an understanding leader, managing emotions, connecting with people, how working together relies on that emotional connection.
Interesting take.
And finally, their overarching life philosophy, which is quite profound.
What's the gist?
The conclusion to life is not to take the result too seriously, but to think seriously about how to grow and improve.
Okay.
Which gives you balance and flexibility, like an oobleck.
Like oobleck, that cornstarch and water mix.
Exactly. Solid under pressure, fluid otherwise. It's about adaptability, finding balance. Which leads to the question, what does all this mean for you, navigating your own journey?
Wow. What a fascinating deep dive. It really shows how digging into something like this Orcelus letter gives you more than just financial strategy.
Much more. Insights into global well-being, the power of discipline, personal growth.
Yeah, it's all interconnected.
And maybe, if we connect this to the bigger picture, maybe the real measure of wealth isn't just the highest number in your portfolio or bank account.
What is it then?
Perhaps it's more about that consistent, disciplined growth financially, yes, but also personally, and how that growth allows you to contribute to build a life and maybe even help build a world that truly thrives.
A powerful thought to end on. Thank you for joining us on this deep dive.